Hello, 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 good morning. Welcome to another ES Futures Trading stream. Today is May 1st. It's the first day of a new month. It is 8:52 a.m. Okay. I guess we can go straight, not straight to what, we can go straight to our, to check the bigger time frame charts before we can Before we can talk about what is happening right now in this market, I guess it will give you context. Will give you a better context. Okay, let me pull my monthly, weekly, and daily charts up here. I guess I can use this one instead of going one at a time. Um, no, no, better this way. Okay, I still have this market coming multiple times being sold from this level. Not once, not a single time has been bought from this level in the bigger time frame. Two times the market break out from this, what can we call it, support or resistance. Two times has been brought back, has been sold from that, two times has failed. Now we got another one. We got another. Take a look here. We got one here. No, no, my bad. Um, let's do another one. Let's do this. We got this. Still, I just going to put this. Okay, I can put this one here. All right. The market has been trading a range from more than a year. 3, 6, 9, 12. A year exactly. 1 year is this market has been trading a range. The current what catches my there's a couple of things there's multiple things that catch my attention in the monthly, and that don't usually happen, right? Maybe one, maybe two, but there's at least three here. Well, the first thing is, you know, the big range and the narrow range of the of April, the last month. Narrow range. That's one thing. The second thing is that this month or the last month closes with no excess in the upper side. Did you see something like that happen previous month also? No excess, right? No excess here, no excess here. The difference between this month and this is just a very narrow range. Narrow ranges are easily to be toppled. Market can trade above, and the less the less second we know, it is down here in the opposite side. So it could be toppled very easily. The third thing is that there is, February. What is this? February or March? Yeah, this is February high. It is a really close by, really close to this level. The third thing is that this level and this level has been sold one pretty much from this mechanical level, right? Can you see what is there? 4200. A mechanical level, there's nothing actually there, but traders see, market see something on those round numbers, um, you know, tend to trade a lot around those numbers. God now, there's also another thing that can be forming. I don't use this, right? I don't use these channels, but there could be something here. Okay, see? What do we see here? At least this is what I. Oh, come on. Something like that. It's a channel that is forming there, or or you want, you can move it down here as well. You know, it coincides with more. You got one, two, three, four, five. Now move this one. We can move this one higher. So this is a channel here. I don't use this one to trade, but traders see this kind of thing. And if there is something here, okay, so we say that there is there is high odds that this high is going to be taken this month, right? Continuation, we see this high being taken out as well. This is around 43.30, something like that. Okay, you got a big range from here to here, the 12-month range, and right now we are in the upper half of that range. So there's possibilities. You know, there is some odds, there is information the market is setting up for a breakout here. It's going to have a breakout and then fail. I don't know. It's going to have a breakout and come up self-continuation. I don't know. It's going to have a breakout. I don't know. Nobody knows that. Nobody knows what's going to happen. If somebody would knew what's going to happen, you know, probably more likely we wouldn't have a chance in this market. And that's not the case. What actually happens is that since nobody knows what's going to happen, that's what gives us a chance anyways. All right. Now let's take a look at the weekly. Now we have a weekly here. We have a trade here that has developed when this week took this high out and did not have upside continuation. Then it rather took this low out and the low range also. There was a weakness in the weekly here. There was weakness here when the market still didn't. When the market was here. We had two weekly lows that were extremely weak, um, and a clear breakout. I mean, clear breakout to the upside. Clean, very clean breakout to the upside, and the market tests that breakout. This buying coming from that's something I don't like, and especially because it tested this low, and in less than 2 days, it just came back all the way to the other side. This was another trade here. There was breakout failure. It break out below the range, took this range to get the market inside this range, which puts this low inside as an ultimate trade destination, but the trade was rejected. Okay? That movement was rejected. The destination was the opposite side of this range. 1, 2, 3 day, 3 week range was the opposite side of this range. And the market reached the opposite side. Okay. The market reached it. But it didn't take the high. And that high now is 3 week wide. We have three highs. We have a cluster of three low or three highs around that level, which is 4200. It's very close to this high here. The low the gap is 4208, closing the gap is 4220. I mean, upside continuation. If there's a breakout, if the market repairs this high, there's good odds that the market will close this gap here. I may be trading. I may be possibly making even a new high here. But it's coming. It is being bought mechanically. This is very, very mechanical. Look have a weak low here, firecracker potential here. Most of this in the market has been taken. We talked about this before. All right. So now we have the monthly and the weekly very close to a breakout. The setup is for a breakout. Everything, all the data points to the upside in the monthly and the weekly. Right? Everything goes in that way. The same thing happened before. This is something that already happened, and that was when the market was up here. Everything, all the market generated information was oriented towards a potential, towards a breakout. The market did not have a breakout this day, and instead the market was rejected and traded to the opposite side of the range. It took the market 1, 2, 3, 4, 5, 7 days to go to the opposite side of the range. It took the low. Only took 2 days to come back up high. The speed of this trade is what worries me. I don't. This is the for me. We were talking about how much weakness this market had before, how long the inventory was in behind the weakest traders here. I believe now it's even. I wouldn't go ahead and say weaker. Um, I mean, the inventory in the hands of the weaker traders, but the weakness, I perceive more the weakness in the market because what I see is just an extension of this trade here. You got 1 day, 2 days, 3 days taking half of the range, and another 1, 2, 1, 2, 3 days to take the other half of the range. In just a couple of days, the market just going. To me, it seems the odds that the market inventory is too long is very high. Also, that being said, this could be one of those times when the market needs to break before it can rally higher, just because the inventory has got too long. Traders get too nervous here, just every single rally, they've been selling rallies because don't want to risk, right? So it has to break, remove some of this inventory, and here we go again. Let's try again to take this high, which is the 4200. We will see here, for example, another thing that I noticed here. Come on, I know you are here. Where are you? Something else that I've noticed here, and we mentioned this before, is that how the base of this rally, by the way, the market is in short covering rally, it's short covering mode here. The market got too short on the short, but notice where the base of the rally is, right at the 50. Now that's a very mechanical place to buy, which tells me or speaks about who is doing the trading here. More likely not bigger time frame traders, basically uh, just short term money here in this market at this moment in time. Okay, now let's zoom in a little bit, right? Oh, by the way, before we go to market profiles, look how this high. I'm going to remove this one. This can generate. We know that this is a range, right? The same way how this was. The curious thing, the peculiar thing here was that the half of this range, it is just exactly the half of this range as well. It's just I mean, this kind of things don't happen. If we want to do this, we never could make this. I mean, make these two ranges that have the same center. That's just unbelievable. Notice how this high. It has some excess. This day it has no excess in the lower side. It does have excess in the upper side, but notice how close this previous high is. Those highs are very close to each other, almost at the same level, which is the 4200. And now, if we remember what happened in the monthly, we have no excess, right, from previous month. We got also the weekly, and now we're watching at this. We also have the daily. I mean, all time frames, all the market generated information is telling us that the potential of a, a breakout towards the upside is high. The odds are high that the market is going to have a breakout. This is not often. It doesn't happen often for you. But just so you know, this doesn't happen often. It happens Yeah, I remember the last time I remember something like this happened, guess was here, 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 or here. Uh, don't know, maybe it was somewhere in here, but the market has a big break, maybe this one, monthly, weekly, and then it has a big break. And after that, I didn't see another confluence on that monthly, weekly, and daily. This would be the second time in more than a year. So these are things that don't happen often, right? But could be overlooked. Many people just don't see those things. So the potential is there. Now let's take a look to let's zoom in and check market profile here. This is market profile. Friday, man, that was another unbelievable day to the upside. Uh, the odds, the odds are that the market has an incredible rally, like we had on Thursday. Now look at how many distributions this day have. One, two, three, four, five, six, seven distributions. The market closed at only two. This is a very emotional day. Emotional days, emotional decisions are usually not good decisions. Um, More likely that that was there was short covering. Um, the market is in short covering mode now. Notice how the weakness, this is very elongated here, very elongated. Two intraday weekly levels from that day. Oh, by the way, it was bought from 4100 again, 4100. This is not good to be bought from the 50. We saw that. Another one bought from the 4100, and this one bottom from this day high. And notice how is bought here. V or B was bought from seller. By the way, this is not seller anymore. It was seller at the time, very close to seller. And this other day was bought from seller again, from the same level. So all of this inventory here, all of this mechanical trading, I don't believe, or it seems the odds that serious money buying here is very, very low here. Just to me, it's just very short-term trading money here, this market at this moment in time. Um, when the market came up here, there was a potential for a sequential trade. We got one, two, three lows, one, two, three, four highs at the same level. And the market took this low first and then proceeded to take another this other one. There are still a lot for me. There's still a lot of stops here. I don't think these stops are being taken out because if somebody's selling here, more likely they are placing their stops above this high or even above this high, especially having the 4200 right there. Something that happened here as well. You can see POC, how POC is here. It didn't move since it was moved higher. It didn't move much, pretty much remain unchanged here. And notice how the market was bought. One, two, three, four, five, six times. The market coming back to this level. Always coming like this looks like a mini 45 to the upside. The potential for a trade. So when this kind of formations happen, um, the long side is extremely risky. You know, the last thing I want to do, or I want to be, is alone because traders have seen the market going higher and they just want to buy a market, buy and buy. And every time they buy, the market comes back to POC. It don't move. And notice also how how this POC is staying wide. Very elongated market to the upside. All distributions have been closed. And the next time we got something like that, something like a very wide, you know, POC is this day here. Very narrow range inside of this 3-day range, but compare that one to this one. This I think it's too elongated. It has elongation to the upside. Uh, this kind of wide POCs tend to attract the market. They act like a magnet. The trade, I mean, the overnight trade at the opening seems to be this POC. Now, the market is going to open soon, in maybe like 20 minutes, something like that. I think the overnight inventory is very fair, has been very fairly rebalanced. Maybe it's getting short now, a little bit short. It traded, it opened somewhere up here, took the high out, and then just broke to the downside. But it was bought from the first period was bought from value area high. But the overnight cannot couldn't take this POC. At least the market hasn't done that yet. Notice how there's something here that also catches my attention, which is histograms. The histogram. Notice how there's a huge amount of volume here at the upper side. This is a sign that the action to the upside has not ended yet. And the market closed up here. Notice what the closing was. Well, it settles down here, 88, around kind of around this area here. Actually, I don't have this. I it looks to me like it was too late in the day, and there is potential here for a sequential trade. Whatever size taking first, the next one, the next size next. That's what is a sequential trade. But notice how the action has not been completed to the upside. Now, take this one and put it together with the daily. The daily action has a non-excess high. Add the weekly. The weekly doesn't have an excess high. It has 3 weeks highs that are close together, and add the monthly as well. All the time frames are suggesting, that the upside, that there is upside continuation for this market. Now, it seems like, to me, it seems like too obvious, or if you haven't seen that, I guess you need more job to do. You need to work on your observation skills, right? Don't be frustrated that you didn't if you didn't see this, because it happens with time, right? It happens with time. Just keep working on that. Now, what happened if what is expected don't happen? Right? Because at this moment, I think it looks to me like the market is just too long. The market has moved too far, too fast, too much. It's such, in 3 days, the market went from one side in less than 2 days, actually. In 2 days, went from one side of the range to the other side of the range, really fast. And notice how the VIX is. The volatility index is below 17. It's almost very close to 16 now. I perceive really high risk in this market. To me, the risk is high. The VIX is it's just not reflecting that. That's my humble opinion. It's not reflecting. There's just too much risk in this market, and the VIX is not reflecting that. Now, if I use this, okay, let's take a look. Let's take a screenshot. I will take a screenshot of these histograms here, because there's something I want to highlight here. Just a second, I will be there in just a moment. Okay, look at this. You know, high volume here, high volume here as well. I can put a line here, high volume here as well. Believe it or not, let's highlight this volume as well. Look what this market was bought. There's a huge amount of volume here. The market was just bought from that level. And this is the thing is that it has higher volume in the upper side here, higher volume in the lower side here, narrow, high volume in the center, high volume in the lower side, high volume in the lower side, high volume in the lower side. This was key for me. And then, the observation the market just was being bought at this level. This is the 47. This level here is the 47. I know, 4170, I believe, right? 47. Okay. So the risk here, if this market doesn't break, or if the market breaks and come back, there's huge amount of supply down here. The market can trade through these levels very, very fast. And what I believe there's a huge amount of risk is that this level here, it's a very mechanical level. This was settled. The market was on sell. Very mechanical buying. Just where very short-term traders do that. Okay. The structure of the market is extremely weak to me. Okay. It doesn't mean that there's not going to be a breakout. Okay, and I'm not saying that I'm going to go short. What I'm saying is, if I'm going to be long, I need to know, or I know that the risk I'm taking is very high. Okay, and I won't let. What I'll do is, if I do have a long position, my stops will be very tight. There will be zero chances that I trade without a stop, right? Because the risk is high, really high in this market. Can you see how we are building scenarios without actually talking about those? The model, the scenarios that I think has good odds happening is a breakout to the upside because we have no excess in the daily, no excess in the weekly, no excess in the monthly, um, and Friday closed at the highs. It just closed at the highs, very high volume at the highs, and notice how Tether is very up here. This is a small spike to the upside. Notice how it took this high out, but just for a small range, small range, more like excess rather than a spike to the upside. It's very hard to put a label on that high. It could be excess, it could be a spike. I think the more relevant thing to me to observe today is rather the late pullback low from Friday. Okay, if the market can hold this level and build value above this level, or even close above this level, it means that just nothing has changed, right? The momentum to the upside remains. Um, Remember, I hope you haven't forget what we have this week. This is a packed week. We got a lot of things for this week. A lot of things going on during this week. We have ISM, PMI, JOLTS, FOMC, Fed Powell press conference Wednesday. Jobs not that much, and non-farm payrolls on Friday. Oh, Apple. I believe Apple is the only big company that reports this week. We got Apple here on Thursday. There's nothing else. Maybe AMD tomorrow to monitor what can. I know. These are events that can bring volatility, but there is nothing else here, right? But regarding, I mean, earnings relative to last week, just Apple, most of the big tech has been up report. And something else that I was checking this morning here is the following. What the heck is this? Okay. What is how this market is what the market is doing. Apple, this is Apple, Amazon, Google, really high. Can you see what is that? Meta. Look at that gap in Meta. You know, they're squeezing the shorts here. It was a good trade. This was a good trade. The Meta was just being crushed, you know. I hope you can see if you trade the stocks. This at this moment in time, there was just too much, man. Meta was going obliterated by the market when it reached this level. It was a good trade to the upside. Microsoft. Look at the gap. Look what Microsoft was doing, and now what it is now. Netflix, Tesla, Alcoa. So these are kind of like these tech companies, Microsoft, Google, Meta. These are the companies that are moving the market higher. Everything else is to the downside. You know, Cisco, IBM, Chevron, Mobil, Bank of America, JP Morgan. These are the banks. Schwab, Wells Fargo. And this is FRC, this First Republic Bank. You know, this bank has just been acquired by JP Morgan. Visa, PayPal, Target, Texas Instruments. Everything else is to the downside. Just a couple of companies, just a couple of tickets are moving, are carrying the market to the upside. That's a very risky thing to do, but this kind of movement has happened before. And the distance that the market can be moved by the strength of just these few companies can be really high. You know, can be really long distances just by those two things. Right? I remember Jim saying that in the 70s it was IBM, right? IBM doing this with the market. It was the only one that was carrying the whole index to the upside for years, not months, years. It seems like it's happening again, right? Now we are a few minutes to the opening. POC is very close here. If the market takes the POC here, next reference is the late pullback low, and we ultimate. It seems so far now at this moment, the 41.52. But I won't discard this level. Even though we talk about all of the possibilities that the market can have today of making a new high, or at least not making a new high, but taking this high out, this one, and particularly now we have two overnight sessions that are the high of the market. This is the high made in the overnight, very close to 4200 mechanical level, and now this one as well, today's as well. This kind of trades, notice how trades are selling, selling, and what they are having, you know, the rewards that they are getting. from their constant selling is very low. They have very low to show here. Now, I won't say the inventory is fairly balanced. Inventory is fairly balanced. Market is inside previous day range, previous session range. Opening inside previous session range, advertised chop. The closer the market opens to the center, the higher the author's chop, the higher is the odds of having a rotational market for that day. All right. I'll take a minute break. Come back just before the open. Okay? Okay. Market's about to open. Oh, by the way, I didn't check. Wow, gold has a huge rally. I forgot to check gold. Very risky to be long in gold as well. Okay, market was bought open. I was bought from that level. Man, this is the lowest opening, lowest volume in the opening in the last 10 days. Look at this opening, very low. They make a new low, 50, 54 is a new low. Look at the rally gold is having, and look at the lows they have here. Bonds are not safe zone. Okay. Market didn't care, but look at the open. Open and boom. Let's see the market can take this high. There's a lot of things going on at the opening. Trade is more often than not, want to be part. The market has rally on Friday, rally on Thursday. No, the market is going to rally again. So I want to be part of the rally. I'm going to go long now from the opening. And I am not going to miss this time. I missed Thursday, I missed Friday, I hesitated. Now I'm not going to miss it. I'm going to be long from the opening. I'm going to make a lot of money today. Because I know the market is going higher. That kind of that kind of things have the tendency to get into the mind, in the mind of traders. Try to pull yourself away from that. Try to see what the market is doing. I'm not saying the market is not going to rally, okay? Look at what that high is. That's not a good high. Settle? Of course not. And the market can have a spike here. One of these sudden movements to the upside that took took these stops out, took these stops out, and took these stops out, took this high and take the 4200. And now the closer we are to this range, to this level, if there's any kind of problem, it could happen around this level here, 4200. Let's see what the market has to give. Really, what? I like the opening. Or what do I like from the opening? I like the market open and just boom went to the upside. What I don't like is the volume, really low volume. That's a new low for the market. Um, Even though we do have this kind of volume on Friday, higher than everything else, sounds higher than those three. I know this is end of the month. There's a lot of weird things happen at the end of the month. Okay, so the last thing I want to do is be a seller here. Look at where that high is. Try the sell. Right, this high is really close. Look at that high, man. Oh, gosh, very risky trade. Very risky trade. Be a seller here. If you sell here, this is a mechanical trade, selling from this high. It is aimed just to take a couple ticks here. I want to. Your stop is very tight to this level. Maybe one tick and that's it. You sell from this level, the market, and this happens so fast that you need to have orders. You can set up your orders. So the market take this high, pull you sell, and put your stop one tick above, and that's it. It didn't happen. It didn't reach that high. The trade is just a couple ticks, maybe 1 point, a couple points. That's good, but that's the trade. No more. Expecting something big coming from this trade to the downside is unreal. It happens. but the risk is high. If actually this is a trade. Maybe coming to halfback to POC, and that's it. That's the trade. It's over. Trying to extend your gains past this level, for example, in this trade. That's that's what when we that's what we call overstaying your welcome. I'm not saying cannot happen. All right. Please, if you have any questions or comments, just let me know anytime. Anytime. Hope you know the news. FRC about assets were going to be will be sold to JP Morgan. So that part is that crisis, that the banking crisis has been resolved, has been solved, not resolved, solved. Friday's high has been taken out. Selling now is coming from last. Not that good. All right. Continuation, we see this high being taken out. This one, and especially this one up here. The market just has died here. The good thing is, has took, it didn't care about late pullback low from Friday, nor the wide overnight, not the wide POC from Friday as well. It's just going to the upside here. And now, what is the direction of the market? Where is value relative to previous day? Value is higher, right? Value is overlapping to higher. So you trade with value. I know the market is higher, the market is high. I know there's a lot of weakness in the lower side, but that's no reason to go short. Because if I short, I will be doing a trade against the market, against what the market is doing. The odds of success, the odds for me having a successful trade, a winner are lower when I trade against value. Now, the market opened inside previous day range and has come out outside of the range in the first period. That's a good thing. But I don't want, if I have a long, I don't want the market to come back inside this range. Now has come out. I don't want it to come back inside this range. I don't want that. Very low tempo, it's giving us some volume here, at least in the intraday, right? I mean the index, not intraday, the index, because the market is lower, remains lower. Seems like it's going to be lower than Friday, actually. The buying is coming from last, okay? It's very. No, I don't like this. I don't like this rally here. I think I can see the markets going high, the pressures to the upside, but just notice how slowly these things. Oh, news. Now 9:45. Remember 9:45 we have PMI and ISM at 10 a.m. Okay, there must be something at 10. Market. Did the market come back to Friday's high? No, no, just the last. Came back to last. It was bought from that level. Look at that. This high has been taken. Next destination 4200. Overnight high. Now the breakout has happened in the daily, the intraday, the daily, weekly, monthly. Now it's happening in the daily, it's happening in the weekly, it hasn't happened in the monthly yet. It's where the odds, right? It's happening here, happening here, happening here, happening here. Now all of these were pieces of information the market gave us in the morning. The risk is high, and that's the trade. That's what the market is doing. The market is looking at this next reference in the upper side, overnight high and 4200. After that, further high. Did you see the pressure of the market? Where the market was pressuring to? Yeah. And if you're long, just keep your stops tight. The market selling, I guess where the market was, the first sign was market selling from sell. Market sold from sell. What was sell? You know, remember was this high? Well, this I don't remember what was but the market just came back. You know, I guess it took POC overnight POC back, but it couldn't take the opening. It couldn't take the opening. Now, are you short in this market? Short is the last thing I want to be. I understand the risk of being long, but that doesn't mean I'm going to be short. Value is higher. This is too early. Value is higher, but the trade was to the upside. You know, we saw the monthly, the weekly, the daily, the intraday, everything was pointing to the upside. Yeah, everything. Now the market has took this high. Now the next one is this. Continuation. Still, it's unbelievable. Unbelievable. We have, can you see? We got one, two, three, four highs in the weekly, three highs in the monthly, three highs in the daily. You know, all together here. One, two, three. And overnight, I mean, market high made in the overnight here. And 4200 right there as well. Gosh, how low this volume is. This can, discourage traders to go long as well. Yeah, but this is just a piece of information. This is just one piece, one single piece of information in in all the pieces that are the market. We have we know that this movement on the outside maybe is not backed by, it's not has not volume backup, but that's just one piece of information. It's not everything. It's, that will be looking for just the only thing that is against the movement. Could be one thing that's going on, but what are the things they favor? Overwhelming, we have we have this weak highs on the upper side. This high has good also been taken out. It's just the market is just too close to this one. Very mechanical selling coming here. I want to see what happened at 10 a.m. Very risky. There's high risk here because 10 a.m. we have ISM manufacturing index. Let's see what the market is being bought here. It was bought from last. It was bought POC. Now it's being bought from. I mean, now it has traded through this level. It's high. But I don't know. I mean, the market has the chance. I don't think. The market has come this distance just to leave this high unchecked. I don't think so. That would be something crazy. The field support line has been broken, which is our 18 high. Now this pullback could be an opportunity to buy, man. Now we got only 4 minutes to ISM. I don't think volume is going to catch up. Volume is lower. The exception of the ruble, when the market opened inside previous day range, they also have it chop at high. The exception of that, no, it's not the rule, right? But the exception is when the market or extension happens when the market takes out or gets out the previous day range in the first period right away. But it did it. It did it today, but the conviction is not here. It's just so slow, coming back and forth, back and forth, back and forth, back and forth. No, I don't see conviction in this market. The tempo is very slow as well. Okay, 2 minutes for ISM. I think traders are waiting for that number as well. Man, this is just unbelievable. That high is extremely weak, super weak. You got the monthly, the daily, the weekly. The only time frame that where that high remains, not even the intra, even this day, this one is, you know, look at this, 1, 2, 3, very close here. Look at this one as well, 1, 2, 3, 4. Look at this too, and look at here, the overnight, this overnight. Now everything points to the upside here, everything, rejecting any kind of selling down here at the open. The only thing that is not behind this movement is volume, which happens to be the most important thing, right? But this could be a market setting up for a. Remember, tomorrow. What do we have tomorrow? Wednesday we have FOMC. FOMC. Oh, look at that! I mean, the risk, right, of being high. These are this is an inside bar. The market has come back inside previous day range. Remember, the number is doesn't matter. What matters is what the market does with the number and also what time the number is. Right? There's a big break that happened right now, but notice where the market is, right? It's in between, this high volume here, and market is right there at the center. I was falling asleep, man. I was falling asleep watching this market. Now and this is just mechanical selling here. The market was just being so slow here. It took last, it took this high out, it took seller as well. It didn't take overnight POC. This is an inside bar so far, but the period has just opened. The negative thing is the market has came back inside the range, but it is an inside bar. It's a perfect inside bar. Notice how big A is and how narrow B is. B is a very narrow range relative to the previous bar, and it's exactly at the center. That's an inside bar. That's a definition of an inside bar. Inside bars are a form of balance. Are a form of balance. Okay, let's replace those highs now. All right. Questions. There's a lot of chop going on here. Not a clear trade yet. The breakout hasn't happened yet. The breakout to the outside hasn't happened yet. Still there. This kind, I mean, from the intraday, this kind of histograms, this kind of high or selling days, I don't like this kind of selling days. When it's too now, the market open and just boom, sell from that level, right? The same thing, if the same thing happened in the lower side, this what I have not what I say is what I have noticed the market tend to come back to check those ones, you know, during the session. If the market doesn't extend too much or too far from those ones, but usually the market comes back and check those ones. Eh, why I have a theory here. It is just like a forced selling there. There's somebody sold, put a order there, and boom, there was no stops there. You know, they start to feel lower, low volume there, very low volume there. If if this market, if the market gives us a inside bar, usually the trade is go with the breakout of the inside bar. Once the bar has been printed, okay, once the period ends, the market has this bar. For example, it doesn't have extension to the upside, not to the downside, and C opens, right? If C takes one high, go with break. It is or if C takes the lows, go with break and monitor for continuation right away. Because this is market imbalance. This is market imbalance. I understand. Okay. It is 10:10 almost. It's 10:07. Unless you have any questions or comments, I guess I'm going to call it. I'm going to call the morning stream for today. Come back. I will come back later with a market update. And I wish you guys a good rest of the day. Stay safe. Have a Wonderful rest of the morning. Stay safe. Bye. Oh, no problema, Luis Fernando. No, 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 no hay problema. A eso estamos. Ten un buen día, ten un buen resto del día, brother. Bye bye. Oh, Luis Fernando. Mira, a ver, aquí te muestro un trade. Este mercado está súper, es bien, bien riesgoso, ¿ya? Está, el riesgo de estar long, long es estar, tener una compra, ¿no? Es súper, súper riesgoso estar para el upper side. Eh, uno tiene eso en consideración, ¿no? Cuando considera un trade, porque la dirección es hacia arriba, el value está hacia arriba y todo eso está hacia arriba, ¿no? Eh, el riesgo, como el riesgo es alto, si uno tiene una posición aquí, una posición long, es un stop bien, bien, bien cortito, ¿ya? Y esto es lo que se llama una barra interna o inside bar. Y el trade, si es que esta barra cierra, por decir, si es que esta barra cierra así como está ahorita, porque notas cómo está una barra previa grande y una barra previa. Es una inside bar. Y miraste las condiciones que estos mercados tienen, ¿no? El potencial de tener un upside breakout es grande. ¿Qué pasa? You know? Si esto tienes un breakout de esto, ¿no? Porque ¿cuál es este nivel que tienes aquí? No, no llegó todavía, es 41, 42.08 o algo así, aquí. 0.8.5, aquí todavía no estamos ahí, estamos lejos de eso. Y, y el breakout, el trade es go with the break of this inside bar, ¿no? Si llega aquí ahorita, por decir, o sea, ya no es una inside bar, todo, sigue siendo una barra interna, pero es un poco, tiene un poco de extensión hacia arriba. ¿Ya? El trade era, si esta barra terminaba como estaba pequeña al cierre. ¿El trade cuál es? Go, uno toma el breakout hacia donde sea, hacia arriba o hacia abajo. Puede ir hacia abajo, puede ir hacia arriba, porque es una forma de balance. Los mercados siempre están buscando por balance. Always looking for balance. ¿Ok? Pero raramente se mantienen en balance por largo tiempo. Y el breakout de ese rango, de ese balance, es el trade. Y uno tiene que monitorear eso. En este caso, monitorear con mucho cuidado porque sabemos que el inventario está súper long. Hay una tremenda cantidad de weakness o de súper débil en la parte de abajo. La estructura es muy débil de este mercado, entonces el riesgo de estar long es alto. Todo eso se considera, ¿no? Para hacer el trade. Y si hay un breakout hacia arriba y el breakout falla, uno no se enamora del trade, uno no se casa con el trade, sino pues, tomas tu stop out y, o sea, tu pérdida, lo que sea, y pum, cierras. Porque el trade era ese, ¿no? El trade, por ejemplo, vamos a decir, estaba aquí esta barra, ¿no? Era de ese tamaño. ¿Ya? El trade, si es que se cerraba esa barra de ese tamaño, por decir, era una barra bien bonita al centro. ¿Ya? Entonces, se va para arriba, te tomas el trade que se va para arriba. Pero apenas, y el stop es ese, la parte de arriba, en este caso de aquí, pero no la parte de arriba. Apenas sale de ahí, se toma ese trade y después, si es que regresa ahí, ese es el stop. Y si de inmediato sale, pum, y estás en rojo de inmediato, te cierras de inmediato también. Pero son trades rápidos que uno tiene que ser bastante, bastante hábil. Y a veces cuando uno no tiene el capital o no tiene una cuenta grande, eh, es muy riesgoso tomar ese trade. Entonces, por eso es que se ponen ese tipo de stops bien, 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 bien cortitos, ¿no? Y no importa, y una vez, o sea, y el pensamiento es, tienes un trade, funciona, funcionó o no funcionó, y si no funcionó, no funcionó. Ya uno se olvida de ese trade, vamos a ver qué cosa es el siguiente. Porque puede pasar que al rato, el siguiente periodo y el mercado esté hasta acá arriba. Oh, dice, no, no me hubiera quedado, dice, no me hubiera quedado, estaría bien ahorita, no hubiera perdido tanto. ¿Ya? Pero por una vez que hace eso, ahí va a haber unas 8 o 10 veces que va a estar en contra. Ya, eso, puedes ganar una vez, pero la mayoría de las veces no sucede así. Entonces, la mentalidad, el mindset es la forma de pensar, ¿no? El mindset es, agarras un trade y una vez que lo cierras ya te olvidas de eso. Te olvidas. Porque estar arrepintiéndose, mirando hacia atrás, no tiene ningún sentido, es contraproducente, no nos ayuda a pensar o a estar en enfoque o tratar de enfocarnos en lo que el mercado está haciendo. ¿Ya? El trading es así, uno pierde todo el tiempo. La cosa es mantener las pérdidas cortitas, poquitas, ¿no? Y extender los wins. Es parte, ¿no? Esa es una parte nada más, ¿no? Y es bastante, y como te decía, estos futuros son bastante riesgosos, ¿no? Hay otras, si no, hay, si utilizar, no está el SPY, por decir, ¿no? Donde un movimiento de un punto está aprendiendo, el riesgo es bien alto. Y estadística, ¿ya? El 80-90% de las cuentas que se abren, ¿no? Para trabajar se cierran en las primeras 3-4 semanas. Es lo que duran, ¿ya? Y porque la mayoría no entiende el concepto de riesgo. La mayoría piensa, y yo me incluyo ahí, ¿no? Estaba en ese grupo de que eh, voy a arriesgar 50, voy a arriesgar 10, voy a arriesgar 100, voy a arriesgar 500, ¿no? Pero no es así, ¿no? Me doy cuenta que el riesgo, al menos yo lo miro ahora diferente, ¿no? Y veo el riesgo aquí es alto, ¿no? Pero tengo ese potencial de un trade aquí hacia arriba, ¿ya? Pero el potencial de ese mismo trade de fallar, breakout and failure también es alto. Eso es uno, solamente uno, ¿no? Mucho cuidado, muchísimo cuidado. Para mí el riesgo es bien alto. Ok, nos vemos más tarde. Espero que te vaya bien, espero que te esté yendo bien en los business también. Alright, nos vemos. Chao, chao. No problema.